subscribe now and press the bell icon. Never miss an update.
Yeah, so if the person sells off the property, even though it is not taxable, we need to be able to, we need to include that for the purpose of calculating thresholds. Right? That's what we talked about. And same thing with foreign earned income. Section like the Form 2555, we can take exclusion up to $100,000. That means this income will not be taxable at all. But we cannot take that exemption and say that, okay, we don't have to file, the income tax return because we are below the threshold. Am I clear?
Yes, ma'am.
Yes, ma'am.
Yeah, so see it's different things. Right now we are just focusing on should we be filing tax return or not? Am I required to file tax return or not? For that, IRS is giving all these rules that you add up your income, even though you know it is not going to be taxable. Like, for example, tax exempt interest income, which is given by government. It is not taxable. Or any gain that you got on disposing of personal residence. We know it is not going to be taxable. Or any foreign earned income. We again know this is not going to be taxable because we will claim exclusion. Okay, but what IRS is saying that, yeah, it may not be taxable, but you add up all of that. And if you're crossing, the threshold limit, you're supposed to file it. Okay, Bhavani, can you read 1.10?
Yes, ma'am. Josie is retired and receives only $2,500 in interest income for the year. She sold her residence, which she has lived in for 10 years, over 10 years, for $180,000 with a gain of $40,000. Even though any gain on the sale of the residence is excluded from income, Josie is required to file an income tax return because the gain is added to gross income for filing purpose.
Right. So the gain is added to gross income for filing purpose. There may not be any. See, all she's having is she's retired. She's not having any other income. All she's having is 2,500 interest income. If this is the only case, she doesn't even have to file. But now she sold her residence. She got gain of $40,000. Even then, she may not have to pay any taxes, but she has definitely to file a tax return um, because the gain is added to gross income for calculating the threshold purpose. Okay. And again, this is a very important point. Even if it is not required, an individual should file. This is what even IRS say. We also tell the same thing to client that if it's really, really minimal, it's fine. Otherwise, you should definitely file and either to obtain a refund or just to establish a record with the IRS or to have your tax history. Have a consistent every year tax history. One year you may not have an income, other year you may have, but then it's better to file every year, and even if we are not required to file. So due date, and again, a lot of people realize this is very important during COVID times, because people, those who have filed tax returns consistently or at least for last 2-3 years, where IRS had their information, they were all given like those, the credits, the COVID credits, and all those economic impact payments and all, and that like added up to, for a lot of people, it got added up to like $5,000, $10,000, even $8,000, $10,000 of this free money from IRS, only because they were filing return. So IRS knew that these people have income below certain threshold, and so they should be giving those COVID, payments out. And that's when a lot of our clients realize, I mean, not our clients, but then other new people, those who came to us, that they should have, at least if they would have filed, they would have got some benefit as well. It doesn't hurt in filing. We should always file. If they're a US citizen, green card holder, we should tell them always file the returns, whether you have income or not. And it's just better to have a record with IRS. Again, due date, this is all we have already seen, 15th day of 4th month. We can get an extension by filing Form 4868, and this is what Rohit and Divyansh they're working on. We're all going to roll over the files, pull in this Form 4868 in all 1040 returns, and fill it up properly. Make sure there are no errors and all, and file it before April 15th to get an extension of 6 months. So that will give us a time until October 15th. Whatever it's better, either we file the returns before that or we just go for an extension, which is actually will keep us safe. There will not be any other penalties and all for not filing in time. And any citizen who is on a military duty or stays outside US and all, they're given automatic 2-month extension. This is also we have seen. There's no need of filing Form 4868. For them, the deadlines are automatically moved to 15th June. The non-resident tax return is again must be filed by 15th day of 6 month. So that's going to be 15th June. When not subject to wage withholding or otherwise, we usually go with 15th April only. If the wages are subject to withholding, if they have got any payment where there has been a withholding which is being made and all, it's better to just take 15th April as the date, but technically they may also get 2 months of extra time. Any liability payment, so there's something called late payment penalties or late filing penalties. Whenever we are doing 1040, if we see the client has to pay certain amount, we should always go to that penalties page and we try to calculate, is there any late filing penalty? If we are filing after the due date, obviously there will be late filing. Late payment penalties, if you are making the payment again after the due date, there will be some. And how do they calculate it? It could be up to 5% per month, but maximum of 25%. And what do IRS say? That if by the due date of the return, if you're paying 90% of the actual tax liability, there will not be any other penalties. So 90% should have been actually paid out by April 15th. And remember, when we are getting the extension from April 15th to October 15th, IRS does not give any extension on payment of taxes. So the taxes are still due by April 15th. That's why we do all those estimates and analysis, even like a rough analysis and all, to let the clients know that, okay, make sure some payments are going out, or at least cover up majority of your liabilities, and rest we can see later, in order to avoid any interest penalties later on. So even though we will not be filing by April 15th, we will not be filing our tax return. A lot of those tax returns will not be filed, but we will still prepare all the files, keep them all ready by making as much true estimates as possible, so we can come up with a realistic amount of tax liability and have them make some payments along with filing extensions. Okay. Then record keeping, obviously the record keeping is very important and all, and employers are supposed to keep on employment taxes like 940, 941s and all, at least for 4 years, they have to keep the record properly. There is an employer identification number which is given to every person who is running a business or who is hiring an employee. Okay, so this is a 9-digit number which IRS is issuing to the employers, and we call it as EIN. This is not SSN. When we say SSN, Social Security number, that's linked to personal taxes. EIN is more of is the number for the businesses. Okay. Then again, like if the payroll payments are not paid in time, and especially this is for you, Hemant, you can see if you're not making the payments in 1 to 5 days, up to 2%. So 2% of your total deposits, could come back as penalties. And if you have missed for 16 days, 10% is, that could be a big amount. If you're making a tax payment of like $20,000, $30,000, $2,000 to $3,000 can come up as penalties. So we always, as soon as the payroll is run, let's make sure all the payments are made between 1 to 5 days. That means all the social securities, federal withholding, Medicare, state payments, everything has to be made out in between 1 to 5 days. Okay, last thing over here is identity protection pin, IP pin. Again, a lot of our clients have been issued IP pin. This is not a mandatory thing by IRS for each and every taxpayer, but wherever they think that the security or identity has been compromised for the taxpayer, there have been a lot of credit card frauds in in US, or the data breaching might have happened, or some other kind of stealing or theft of data and all those things. So if those and that, wherever there is a tampering with SSN number or any other personal identity information, usually companies will give a list to IRS that we had, or maybe banks will give, a financial institution, insurance companies, they will give a list saying that, okay, these SSN might have been compromised because we had a data theft or we had a virus attack or something like that. And IRS may take a decision. They may say that, okay, we will issue them a PIN and they will not be able to file tax return without that PIN. Another reason, which is very which is very common, I don't know if you've heard about it, that a lot of people, and this is happening a lot from India also. There's like a whole army of hackers sitting in some Bihar or West Bengal or Calcutta, those part, those who are calling people in US in the name of IRS. They get their information, somehow they get more information, they even file the tax return for them, and they get the refunds in their own account. There's a huge fraud happening that way. Or they tell that, okay, we calling from IRS, this, and they talk it in such a stern way. The person gets very scared. Oh, I might get into trouble, and they may say you have to pay 5,000 immediately, otherwise we are sending police to you and all those things. I mean, IRS keep issuing those notifications that we will never ever call you. If you get a call, I mean, it's 99% it's going to be a fraud call. So we always need to, if a client comes and tell her, I got a call from IRS and they're saying you have to pay this amount, or your account is put on hold, or will take out money from your bank, or will put a lien and all those things, we just have to calm them down, saying that nothing like this would happen. IRS, first of all, will never call taxpayers unless there is an audit going on. That's a different thing. Otherwise, they will always send a letter. So the first, or they will never even email. If they get an email that looks like IRS email, again, that's a fraud. So for those cases, IRS may issue a PIN saying that no one else can file a tax return in your name unless you give that PIN number. Okay, so we have to put that PIN, only then the IRS, the tax return may get processed. All right, so with this, we will also end up this topic of who is supposed to file tax returns. Any questions? Any comments?
Ma'am,
Yes.
military man is getting the extension for the 2 month, so he can also file for the 6 month extension.
Not 6 months, they can file for extension, but they get time only until October 15th. So technically, they'll get 4 months after the automatic extension of June 15th.
Okay.
Because military people are being placed like everywhere. Sometimes they are in remote areas, sometimes they're outside the country, and also IRS just gives them, more flexibility.
Okay.
In fact, even with around COVID time, I think they moved the deadlines to July 15th or something. That was the only time I know, last 15, 20, 30 years, whatever. IRS has never, ever extended their deadlines. It has never happened that they will come through 2 or 3 days before that, okay, we will extend it by 5 days or 10 days, our systems are not working, whatever. Never, ever it happens. This is very common in India, but not with IRS. So that only during COVID time, they did it, and probably they're not going to do it again. So for 2020, 2019 returns, which were due by April 15, they gave extra 3 months and they were due by July 15th. Any other questions? We'll wrap it up here and we'll continue tomorrow then.